Today, we've got a real head-scratcher for you, a story from American Airlines that just, well, on the surface, it doesn't add up at all.
So that's the big question, right? It's the central mystery in their latest financial report. And don't worry, we're going to unpack it and figure it out together.
Okay, let's start with the good stuff, the really good stuff actually. In just one quarter, American Airlines pulled in a massive $13.7 billion in revenue. I mean, that's a company record. It completely blew past what anyone was expecting. Just an incredible number.
And this is the crazy part. In that exact same record-breaking quarter, they still somehow lost $114 million. So you've got to ask, where did all that cash go? How does that even happen?
All right, let's get into the weeds here. This whole story is about way more than just numbers on a spreadsheet. It's really about a giant airline trying to fly through some pretty serious turbulence.
You know, what makes that record revenue even more amazing is what they were dealing with at the time. We're talking about huge disruptions, bad weather, and that nationwide FAA tech outage that grounded flights everywhere. The fact that they still managed to hit that peak revenue, that shows some serious grit, some real operational muscle.
So where did all that money come from? Let's break it down, because this is where you really start to see the airline's game plan come into focus.
Okay, so they were basically three big engines pushing this thing forward. First, you've got more people flying up front in those premium cabins. Second, their loyalty program, AAdvantage, is absolutely booming. And third, business travel is back in a big way. I mean, revenue from that segment shot up by 14%. Wow.
And get this is a huge, huge shift in strategy for them. Almost half of all their ticket money is now coming from those pricier premium seats. That is absolutely not an accident. It's proof that their big bet on the front of the plane is paying off. And believe me, that's a massive deal for their bottom line.
And it's not just about selling seats on planes. Their AAdvantage loyalty program, it's a money-making machine all on its own. They basically sell miles to credit card partners, which creates this super profitable stream of cash that has nothing to do with whether a plane takes off on time. And with spending on those co-branded cards up 9%, yeah, you can bet that's something investors are paying very close attention to.
Okay, so if the revenue side is looking so good, how in the world did they lose money? Well, this brings us to the other side of the equation, the challenges, let's call them headwinds, that American is flying straight into.
And here it is. This is the answer to our big puzzle. Their operating expenses hit a whopping $13.54 billion. So what's driving that? Two main things: higher labor costs from new union deals, and just the rising cost of, everything else to run an airline. These expenses pretty much ate up every last dollar of that record revenue.
Now, to really get this, we have to talk about a little industry jargon, CASM-X. It sounds complicated, but it's really just the cost to fly one seat for 1 mile, without fuel costs. And for American, that number went up 3.9%. Now, that might not sound like a huge jump, but in the airline world, it's a big deal. It means the basic cost of doing business is creeping up.
And this really puts it all into perspective. While American was just trying to get back to zero, its two biggest competitors, Delta and United, basically scooped up almost 100% of the entire industry's profits. That's not just a gap. That is a massive chasm they need to figure out how to cross.
So what's the plan to close that gap? Well, a huge piece of the puzzle is dealing with their mountain of debt. And they're getting after it. They paid down $1.2 billion in just this quarter. This is absolutely crucial for their long-term health. Less debt means lower interest payments and more cash to invest back into the business.
Okay, so we've seen the good, the bad, the whole picture. So what's the actual game plan? How does American turn these record-breaking revenues into actual, consistent profit?
Well, the CEO, Robert Isom, he's basically signaling that they are playing the long game here. When you hear him talk about continued investments, what he's really saying to investors is, look, we're focused on building a company that's profitable for the long haul, not just trying to make a quick buck this quarter.
So their flight plan really comes down to three key things. Pillar 1, fix the finances. Keep paying down that debt. Pillar 2, invest in the product. That means new planes, better seats, a better experience for you, the customer. And Pillar 3, grow the network. Be smarter about adding new routes. It's a pretty straightforward and logical plan when you lay it all out. And if you're looking for a sign that they think this is working, here it is. For the next quarter, they've more than doubled their profit forecast.
That's a huge vote of confidence. It tells you they believe this whole turnaround plan isn't just starting to work, it's actually picking up some serious momentum.
So there you have it. The strategy's in place, the numbers are starting to point in the right direction. But it leaves us with the million-dollar question, or I guess the billion-dollar question. In an industry that's as turbulent as it gets, can American finally chart a course to smooth air and consistent profits? We'll have to wait and see.